Hi, this is Danielle. Welcome to the Simpler Options premium video for Friday, July 27th, 2018. So today is the day after Amazon earnings, and it also happens to be a day in which we've experienced such a nice rally in the market. I mean, really ever since June 28th, we've been trading pretty much higher. And at this point, we're really just looking for a pullback here. So you can see that I have a major ready and fire sell signal on my daily chart. You can also see that we have met a 1272 and almost a 1618 extension off of this last swing here. And I mean, honestly, after Facebook earnings, after Amazon earnings, after Google earnings, it's just time to take a little bit of a breather here. So we can look at the weekly chart too, and I mean, it's telling pretty much the same story. I don't quite have a sell signal here, but we are pretty overbought, and I am looking for that to revert to the mean. So, we've been discussing this quite a bit in the trading room this week about the significance of this final break above all of these areas of resistance. So you can see, the last 4 days, really, we were finally able to break through, and that was the last area, in my humble opinion, that we had before, we can finally go on and reach new all-time highs. So, if you've been in the trading room this week, you've probably heard me say, after that break, I do think we're going to go on and make new all-time highs in the S&Ps in the next couple months. But as far as short-term, I am looking for a pullback before that comes through. So where could we pull back to? I mean, the most likely suspect here is going to be the 21 EMA. That's going to come in at 27.95. If that level breaks, then I will look lower into about 27.80. But, right now we're trading at 28.17, so maybe 50 points or so. I'll look for a pullback in the indexes, and then, of course, I would like to see another leg higher on to new all-time highs in the S&Ps in the next couple months. So what about the NASDAQ? Of course, the NASDAQ has been incredibly strong. Now today, we're down 1.76%, over 131 points. And yes, that is significant. Of course, it's a significant pullback in the NASDAQ. But, I mean, we can't expect anything else after this rally that we've seen. We've had a beautiful rally since the 28th of June, came up, hit that 1272, and we just pulled back to the mean. So while today was a little bit bloody in the NASDAQ and the NASDAQ stocks, you can see that this daily chart is completely intact, has only come down and touched the 34 EMA, and we might see a little bit deeper of a pullback, maybe down to this 50 period simple, but I would look for either the 34 or the 50 to hold, and once that does, I would like to start buying NASDAQ names again. For right now, I'm pretty flat. I don't have too much going on just because of the overall state of the markets. It's the run into earnings is one of my favorite setups, and then of course we've been trading earnings in the trading room pretty actively. But at this point, now that we've already gotten through Netflix, Facebook, Amazon, and Google, what do we do from here? Well, a couple setups that I'm noticing. I can see that we have this Dow weekly squeeze. Now, the Dow has been lagging behind the NASDAQ and the S&Ps, but I do think that this weekly squeeze is going to be that catalyst that's going to finally break us out of this sideways range we've been in ever since we made those new all-time highs at the end of January. So, at this point, I would love to get long the diamonds. Surprisingly, the Dow's been surprisingly strong. I mean, you can see we just looked at the NASDAQ and the Dow's only down 99 points, which is only 0.39%. But still here, I'm looking for a slight pullback in the Dow before that weekly consolidation breaks out. So if we could get a pullback down to the 8, down to the 21, around the 25,000 area. That would be a perfect pullback buy opportunity for me to get long the diamonds a couple months out with that weekly squeeze. So you can see right here, switch over to our diamonds here. Let's go to our weekly chart. Really, really nice bullish setup there. So, if we could get a pullback down to, let's call it 247, that would be ideal. We might not even be able to get it that deep because it's already trading almost up to that 1272, but we'll see how that plays out. Anyhow, that is what I'm watching for next week. Let's talk about Google and some of these companies that have reported earnings this week. So with Google, very, very strong earnings report, strong move this week. If we look at it on a daily chart, we can see that the strength has absolutely held up after the earnings report. Yes, today it did end up selling off into the close, but that was after it made a brand new all-time high. And of course, I like Google, I like it long, but at this point, we typically look for an after earnings move like this to last about 4 to 6 days. We've already gotten 4 days under our belts. So at this point, I'm looking for a reversion to the mean with that major sell signal there. Let's talk about Amazon. Of course, this is a big story this week with the earnings report. So Amazon had about $100 expected move priced in there on the earnings report. As you can see, the market is closed on Friday now, and it's up $9 after that report. It traded to a high of about $18.80 at one point. Very nice move, but all in all, it just, it was within the expected range. It came right down, it touched the 8 EMA, and it's holding there perfectly. So I think that Amazon is very, very strong, of course, and I think that we can look to it for the next setup. I think we need to wait, give Google a little bit of a time to settle, but Amazon, we might get an opportunity with this 195-minute squeeze that's setting up. So, of course, this could be one where it pulls back to the mean, but that's why we always say no trigger, no trade. And I'm going to watch this setup, and if I start to see a ready, aim, fire buy signal here, or if I start to see any type of moving average cross on this lower time frame chart, that will be a signal to me that it could be time to sell some put credit spreads on Amazon. Another reason why I'm watching Amazon going into next week is because of XLY. So looking at XLY, if Thinkorswim would cooperate with me here. Okay, it looks like we're up and running there again. Anyhow, like I was saying, looking at XLY, of course, this has been one of the strongest sectors within the S&Ps. Of course, this is coming from Amazon, it's coming from Home Depot, Netflix, and beautiful pattern here. Came down, almost tapped the 34. Yes, we do have a ready aim fire sell signal, but at this point, those oscillators are right back in that mid-level range. And I think that they could potentially give us a buy signal right here off of this 195-minute squeeze. So, that tells us to look at XLY, Amazon, Netflix even. Now, I know Netflix got pretty hammered on earnings, and everybody wants to know, where is a good spot to buy this thing? Well, I do think that the 355, 360 level is for the most part holding. I don't think it's any type of no-brainer buy just yet. I think that it could potentially be a buy in the near term, or at the very minimum, we could sell some put credit spreads on it. It's pretty oversold, and the news from earnings and everything, everybody will forget about that pretty quickly, at least in my humble opinion. So I'm watching Netflix for a buy, especially because of that XLY setup. So far, I don't have anything at all, but I am interested to see if we can get a moving average cross over here on this 30-minute chart, and maybe that could take us back up to the upside. Also, looking at Facebook, now this is different than Netflix, and why is it different? I mean, for me, it just has broken far too much support. The decline in Facebook was huge, almost 24%. It has broken all symmetry that I have to the downside. I mean, you can see the previous swings and how small they were in relation to this huge drop. We're below the 200 period simple. And overall, the earnings report was just very, very negative. So I'm not going to look to buy that anytime soon. Of course, it could trigger to the upside, but if you're going to ask me between Netflix and Facebook, I'm absolutely going to stick with Netflix because of those technical levels. Another one that I'm watching right now is Nvidia. So really, I mean, for the most part, I just want to be cautious this market and be mostly flat, but I do really like the setup in Nvidia. Now, Nvidia is down 1% today, but if you look at it right here, I mean, we're still holding this 50 period simple quite well. We still have some buy signals here, but primarily this is a run into earnings. So we've got a run into earnings. We have a fib cluster here. We had another one here. And we also have a 195-minute squeeze. So, and on top of that, we have a recommendation from our friends over at CMLViz on this one. So, all in all, there's not a whole lot of longs I like in this marketplace, but I do like Nvidia, and I think that, if this thing can stay above, let's see if I can get a better level here. If this thing can stay above really the 250 area, and I would even give it a little bit more room down to 246, 248 area, then I would still consider it for a long. So we still have a couple weeks before that earnings report, but overall, like it to the upside, and I'm going to try to focus there. Another one is going to be BABA. So BABA did take a little bit of a hit today, but if you look at this on the daily chart, you can see that it's holding the 200 period simple, and we have this daily squeeze that's consolidating, and we still have a potential run into earnings. So I'm going to keep my eye on that and see if there's anything that I can do with that for the run into earnings. So we talked about, just the overall indexes, a couple of the sectors that I'm looking at. Really, I mean, primarily I'm just going to look to sell premium, be relatively neutral, relatively light, and there are some 5 stars that I'm looking at for potential premium selling plays. So whenever we get pullback in the market like we've seen today, and we'll probably get a little bit more next week, I do like to go back to those 5-star charts and say, hey, which ones are my charts that are pretty consistent, strong technical charts. When these things pull back, let's sell some premium on them. So the ones that I'm going to keep an eye out for are going to be Amazon, like I already mentioned, Microsoft. Now, Microsoft, it's down 1.77% today, but look at that wick. I mean, you can see buyers coming in there. So right now we closed above the 8 EMA. It's incredibly strong. If we continue to get a pullback in the NASDAQ in Microsoft Monday and Tuesday, could be a good spot to sell some premium once that levels out. Another one that I have my eye on is going to be MasterCard. And the thing about a lot of these is that, we don't have the ability to buy them. We did not have the ability to buy them because all they were doing was making new highs. We had our run into earnings here, and at this point we needed a pullback, and now we're getting that pullback. So you can see, measuring symmetry, boom, boom, boom. Might get an opportunity on MasterCard to sell some put credit spreads there. Another one that I like is United Healthcare. And I mean, these aren't, it's not, hey, we're going to multiply our options overnight. This is like simple credit, selling credit on some nice trending stocks. But I think that's what we're looking for the next week or two. So another one is going to be United Healthcare. It's near that new It's near a new all-time high, and just overall has been incredibly strong, and if we get a little bit of a pullback, we might be able to sell some put credit spreads on that. So that has been my premium video. I hope that you enjoyed it, and I hope you're having an excellent weekend, and I'll see you in the trading room on Monday. Good trading.